On this edition of Market Makers Double Bill, we track the success story of two brothers who started with a seed capital of just 2.5 lakh rupees and today are proud owners of India's largest retail brokerage. Dinesh Thakkar and Lalit Thakkar, owners of Angel Stock Broking.
5 lakh rupees. That's the amount that Dinesh and Lalit Thakkar started Angel Broking with. They lost half that sum in no time. But today, as private equity players are lining up to take a 20% stake in India's largest retail brokerage, the value is estimated at a whopping 1,200 crore rupees. Dinesh is in charge of expanding the rapidly growing network of Angels, while Lalit identifies stock ideas that will generate immense wealth. Where are the markets headed? What to buy and what to avoid? Let's hear the views over the next half an hour.
Dinesh, gentlemen, appreciate your time and thank you for joining us on Market Makers Double Bill.
Thank you, our pleasure.
Dinesh, for a firm, Angel Stock Broking, which started in 1987 with a seed capital of just 2.5 lakh rupees, today you're the largest retail brokerage in India. So tell us a bit more about your success story.
See, I started and I came to this market in around 87, 88. That is where I was thinking to start my own enterprise. So I wanted a seed capital. So I wanted to generate a seed capital through investing in stock market. But unfortunately, actually I lost 2.5. So hence the seed capital became 2.5 lakh rupees. But I realized that over here, the retail people are not given kind of an attention which they require. People who are coming new to the market, they don't know how to trade, how to approach market. So entrepreneur in me thought that, okay, why don't I start a business over here, serve retail crowd. This is how I started a firm at that time who was serving just to retail crowd.
So how do you two complement each other, Lalit?
Well, it is this way that Dinesh Bhai is, I will say, it is a visionary, and aggression is in his blood. I will tell you. So my role was to be a sounding board. So whenever he comes with the idea, for example, today if he say that let's open 100 offices, so I had to see that whether we have the resources and whether we can match the bandwidth or not. So my role is to be as a sounding board. At the same time, once a certain area is endorsed, then I have to see that how to execute it. So I had to see that how this development of work can be done from his side to me and to the professional peoples. So this was the role I played till now. At the same time, as you know me, that I like to be in the market to understand what the market is all about, which are the good stocks, which are the good ideas which can be told to the retail investors. So along with the execution part, I am also into the research, and currently I am looking into institution segment to take our research forward.
Dinesh, you proudly admitted that you lost 50% of your seed capital. It appears to me that to be a successful investor, you need to lose money first before you earn money.
This is how actually it happens in business, and this is how actually I am seeing investors also going through the same phase. When they come to the market, they are not aware about how to approach this market. They lose capital, but unfortunately many times they lose capital and they walk away from the market. That is not a right approach. One has to really be patient and have to be invested in market, or it can be market or it can be their own business. See, when you are investing in stock market, it's nothing but you are investing with an entrepreneur. So I would say that yes, journey almost I have seen in all entrepreneur, organizations which have created this enterprise from scratch, they tend to initially lose this. There was one actually research done in US which told that it takes 1,000 days to really prove that your business has stabilized or not, and you will go through this gyration. Once you have completed 1,000 days in business and you are successful, then only you can say that my business is successful.
So the recipe to success is lose money first and then
not lose money, I would say, but fact is that you have to give something for getting educated on that vertical, and that is fact that it is very difficult. I have never seen like business earning from day one. It takes time, it takes capital, it takes lots of hard work, it takes focus, commitment.
Characterize the market for us, Lalit. At 18,000, markets are at a 30-month high. Can we sustain these levels?
Yes, we are going to, I think we can sustain these levels. Firstly, there is no denying to the fact that we are trading at higher band of the PE, but looking at the earnings momentums in the market, which is around 18 to 20% for next 2 years, and additionally what I am seeing is that the capital good industry which I will say, which was catering to industries, infrastructure industries, setting up industries, factories, there was a slowdown last year because everybody was saddled with excess capacity. But going forward, if you look at the excess capacity utilization of steel industry, 95%. Hero Honda is saying I am having a problem. Maruti is not able to expand. Now all these industries are going to expand. So 20% of our GDP is formed by capital good industry, which serves to the industry. Now they are also going to perform. They are also going to contribute.
What about valuations, margin of safety? If you look at large cap stocks and if you keep commodity aside, A quality large cap stocks are available at P multiples of 20 plus now.
That's true, but that is going to remain till the time we are into a high growth phase. So as I told that if today we have shown an 8.5% GDP growth rate along with this new growth from this industry segment, industry infrastructure, we can show a GDP of 9.5% growth rate. So in this context, the most of the earnings of the corporates will be now back-ended. There will be whatever earnings growth we are foreseeing, the figures can be much better. So in this backdrop, definitely the markets are going to be 10 to 20% expensive than the realistic band. So if the realistic band is, let's say, 15-16p, our market is going to be at 18-20p. So this is the fact, we have to live with it.
Dinesh, this year Indian markets are up only 2% on a YTD basis, which means individual stocks are moving up and the basic primary indices are not moving up. Is the trend here to stay?
No, I think enough of investment has been done in this band. If you look at our market, say for last 12 months, we have seen FIS inflows of around $17 billion and which has come almost in the same band. So I think hands have changed and it has gone to a stronger hands, and I would not be surprised if I see market really going ahead from here, and this price band that is range which was very narrow like 14,000 to 17,000 moving to around 15,000 to 20,000 in next few quarters.
So when do you expect a new high for our markets?
Maybe by say next financial year we will see market in a zone where it would be in a new price range. So by next March, I would not be surprised if I see market somewhere near the top, and in next few quarters after that, we will see market passing that, crossing that top.